One of the most important decisions you will have to make is choosing the right legal structure for your company. There are many types of business entities, such as sole proprietorships, partnerships, corporations, and limited liability companies, LLCs. Each one has its own advantages and disadvantages, depending on your goals, preferences, and needs. We will focus on two of the most common business structures, LLCs and C corporations, C-Corp. We will explain what they are, how they differ, and how to choose between them. What is an LLC? An LLC is a business entity that is legally separate from its owners or members. An LLC offers limited liability protection to its members, meaning that they are not personally responsible for the debts or obligations of the business, unless they have personally guaranteed them or committed fraud. An LLC is also a flexible and simple business structure. It does not have to follow many formalities/regulations, like holding annual meetings or keeping minutes. An LLC can also choose how it wants to be taxed. By default, an LLC is taxed as a pass-through entity, meaning that its profits or losses are passed directly to its members, who report them on their personal income tax returns. This avoids double taxation, which occurs when a business pays taxes on its income, and then its owners pay taxes again on their dividends/profits. However, an LLC can also elect to be taxed as a C-Corp or an S-Corp if it meets those requirements. What is a C-Corp? A C-Corp is a type of corporation that is taxed separately from its owners, who are known as shareholders. A C-Corp has a distinct legal identity from its shareholders, who enjoy limited liability protection as well. A C-Corp can have unlimited number of shareholders, who can be individuals or other entities. A C-Corp can also raise capital by issuing shares of stock to investors. A C-Corp is subject to more rules and regulations than an LLC. It has to follow corporate formalities, such as having a board of directors, officers, bylaws, and annual reports. A C-Corp also pays corporate income tax on its net earnings using IRS Form 1120. The shareholders then pay taxes on their personal income for any gains realized from dividends paid by the C-Corp or on gains made from sale of C-Corp stock. This results in double taxation, which can reduce the net income available to shareholders. How to choose between an LLC and a C-Corp? There is no definitive answer to which business structure is better for your company. It depends on various factors such as your business goals and vision, your tax situation and preferences, your funding needs and sources, your ownership structure and control, your risk tolerance and liability exposure, your future plans and exit strategy. Some of the advantages of choosing an LLC over a C-Corp are: you can avoid double taxation by being taxed as a pass-through entity. You can enjoy more flexibility and simplicity in managing your business. You can have more freedom in allocating profits and losses among members. You can avoid some of the restrictions and limitations that apply to S-Corp. Some of the advantages of choosing a C-Corp over an LLC are: you can raise capital more easily by issuing shares of stock to investors. You can attract more qualified employees by offering stock options or other benefits. You can benefit from some tax deductions and credits that are not available to pass-through entities. You can have more credibility and prestige in the market. Ultimately, you should consult with a qualified attorney and accountant before deciding which business structure is best for your company. This is something we can help you with and get the best fit for your business and for your success.